So why don't we call the meeting to order? And the flags, let's do a quick pledge of allegiance. Pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Everybody got a chance to read the minutes?
Yes, and I move to approve.
Okay, I second. All in favor?
Aye.
Aye. For the record, Ms. Bashaw is not able to join us tonight, so it'll just be Mr. Baker and myself. And I'm trying to find the
Can we share with you?
agenda.
Can we share with you? Just look at it in your email.
Yeah. Very slow response.
Okay, here it comes.
So you're gonna have it all up there?
Yeah, it's up on the
Okay.
screen.
Great.
Okay, so can I jump into the trust funds?
Yes, please.
Okay. As of October 31st, the following, we have balances for the following trust funds, special education expendable trusts. We have $241,207.37. We received just over $2 of interest for the month of October. For the next one, get it to scroll down. Amen. Special education. The capital improvement maintenance capital reserve fund. We have interest of almost $2. This month we have a $50,000 transfer in. That $50,000 represents a transfer based upon the last district meeting, Article 9. And so that the total is now $273,067. The next one is unanticipated educational expenditures. We had $1.33 of interest. Again, we had $50,000 transferred in based upon Article 8 of the last district meeting. And that brought our total up now to $200,220. The next one is facility use revolving fund. This is where the rentals for SLC go into. And we had $11,666 go into it. This month we had $6,547 worth of expenditures for Dell Marketing. This is the external tape drive that
Tape drive we discussed, okay.
right, and then also the Tyler Tech. We spent almost $13,000 this month in implementation costs for the new accounting system.
Is that the last of the payments to Tyler Tech, or is there still more to come?
I think we're near the last. The problem that we have right now is we're in discussions. I think they want to end their training, and we're saying that we're missing training on a few different things.
Okay, so we're saying that the training that is part of the package is complete, and they want to move to billable training?
Yeah.
Okay.
And we're saying no.
What's that $7,700?
This one right here.
Yeah.
This is the change. This is it's revenue minus expenditures equals the deficit for the month.
Right.
Okay. We started out the month at 174,000 and we ended at 166,340.
We do not expect that the recurrent cost of $19,000. I mean, I would expect that next month we're going to be back down to the nothing kind of number there, right?
Yeah, or I'd have to look at November, but you're gonna see it start waning. Okay. And then next year, you're gonna see hosting fees, which are gonna be part of the operating budget. Okay, it won't come out of here.
But this, from a financial perspective of loading the fund, so it comes in from rentals of rental income. This can also be increased by a warrant article if we chose to do so. Is that correct?
Increase the contracted amount.
Yeah, you could add money to it, but really the purpose of a revolving fund is to legally segregate certain revenues for specific purposes. So adding taxpayer dollars to it would be, while I've seen it happen, it's going to be more unusual.
But the originally must have been set up with a warrant article, right?
Yeah, it was set up in a warrant article back, two warrant articles. One was in March of 2007, and the other one was March of 2016. It's my understanding that.
16 was expanding use as opposed to funding, is that correct?
Right, so basically back in 2007, they rented the science building to a charter school. And it used to generate
Yep.
significant revenues, and they were using the expenditures back then. So basically because you have that limitation on the revenues, all the revenues have to legally go in here. Unless we go back to another warrant article and close them out and have to go into the general.
Well, it makes sense to go in here, facilities to facilities,
Yeah,
right?
yeah.
Well, my only thought, Jim, is operationally,
Yeah.
from a trust perspective or a warrant perspective, with the types of inflationary measures that are going on, it might make sense for us when we start talking about warrant articles for the coming election. Not election, well, yeah, the election.
Right.
The vote. We might want to take a look at, if we don't have just, so we got a capital reserve, unanticipated, well, that would be where it go, I guess, unanticipated educational expenses. So we should keep that in mind when we start talking about that. We've been hitting like a 50,000. I think one year we did 75,000. With inflation coming up, we might want to take a look at that already.
Yes, and also the news out today, by the way, I heard that the price of crude oil is going down. So.
Are we locked in now or something?
We're locked in for the year at 219.9.
That's pretty good. isn't it?
Okay, yeah, because and we're gonna talk about it a little bit later,
Okay.
but the average right now, if you buy it on the open market, is over $3.
Yep.
So, okay.
All right.
Close this. Now, expenditure reports.
So those are up to snuff now. You know, you've gone through and
It was kind of a nightmare. So when they implemented the system, the company imported some of the debits and credits for certain deductions, okay? And then pointed one of those, instead of going to an expenditure account, they pointed it to the liability. So both the debits and the credits were going into the same liability account, netting themselves out. So we had to go through a whole process and identify, and it was
So we did a balance sheet instead of an income statement.
exactly. Okay, and then so we went through a process where we went through every single payroll, and you can dump this into Excel and then tell the system to go and post it to the expenditure accounts, okay? And then it wasn't until like 2 days ago that the encumbrances came back into line. It literally took an overnight process to get all the encumbrances to work right. So
Is that something you could just program and have it run overnight, or somebody have to physically be there?
no, the first part is correct.
Okay.
We started the computer, told it to run it, and it crashed over the night. And the next day we had to go through and manually process the months individually.
Okay.
And now that it's up to date, processing the months only take like a couple minutes rather than hours
because it's compiling everything.
from scratch.
Yeah.
Okay. So encumbrances are based upon the employee elections right now. So if they've elected a family can, it's going to encumber it. Okay. So for this report, my budget right now is 4.9 million. We had current.
Well, Matt, I'm gonna close that.
Okay, yeah.
Oh, thank you.
Current expenditures of 566,000, year-to-date expenditures of $1.2 million. Now, keep in mind, we also have a $490,000 refund from the health insurance company that have reduced the cost. Okay, the balance, I'm sorry, encumbrances outstanding right now are $3,013,000. What's remaining is $778,000.
Now, does that include the 400 something
The
thousand?
remaining would include the 400 and something thousand that was returned in, they call it a premium holiday.
The
okay.
remaining what?
So,
The remaining that's due, or the remaining that's,
of the appropriation,
oh, I see. So what's left of it?
right?
Okay.
Okay. So
the balance.
yes, so right now we're in discussions of how to best represent this information on our general ledger, okay? To either take that premium holiday recorded as a revenue and then offsetting an expenditure, which would be a net difference of 0 to the cash account, okay? But it would show the revenue coming in from the insurance company, and then it would also bump up the expenditures. Okay.
Yep.
Or we could leave it like this.
But it's embedded in the numbers now.
It's embedded in the numbers.
So the numbers now, if nobody changes, if nobody has a life event that changes their selection, present, and no new hires come on board that select something that hasn't been selected before, we would expect end of year to be about 700,000 in this account. Those would be the two things that could impact it, right?
Yes, right. Okay, this is what I'm hoping.
So is the yearly bill paid through the year, paid through June?
No.
So we got more charges coming.
Yeah, so basically what it's gonna do is,
They're
it's gonna,
encumbrances now.
Oh, they were the encumbrances.
that's right.
So that's what I mean. So including encumbrances,
Yes,
there's no more payments for the actual
right.
current bill.
I have two things. I just want to emphasize that $770,000 includes a very large return of surplus. So
Okay.
it's really more like 300.
Correct.
Okay.
Yeah.
Second, what you described as the way that it works, I'm hoping that it works that way in this new system. It did not work that way in the old system. The old system would encumber based upon like a prior year way of how it was budgeted in the prior year. Okay. And then, so if someone was a single and they got married and had kids in the next year and had a family plan, they would still have an encumbrance of a single person. And then when it liquidated, it increased the expenditure every single month. And Jim picked up on that a couple of years ago. Okay. I'm hoping that when we run the process every single month, that it will update the encumbrances based upon that if someone changed their plan.
Right.
And one would think that that would be the way that it should work.
Correct. That's how I would expect to have it. And then you know that your only future impacts are new hires or plan changes.
Yes, that's right. That's right. Okay. Are you all set with this?
I'm good.
Okay, the next one. This is year-end expenditures. This is everything else. All right. Let me go right to the end. And this is general fund only. So here's your budget, 30 million. I have to point out something too, okay? We had to trick the system for the beginning balances for the encumbrances brought over from the prior year, okay? So if you're gonna be trying to tie out the beginning balance right here, I'm sorry, the budget balance, it's gonna be off by the encumbrances of the prior year. Normally, when you roll a system from one year to the next, it does it as an automatic process. We had to do it manually, so the reports don't look silly, okay? So I'm saying we have just over $30 million in budget. Year to date, we've spent $8.8 million. We have encumbrances of almost $18 million and a remaining balance of those appropriations of 3.6 million or 12%. Okay, 12% is really where I would expect to see the school district. This is as of October. Yeah, that seems reasonable. You would expect it to be about 8% when you hit December, and then it would slide down from there.
So how does that 30,000 relate to the warrant article budget amount?
So if you were to take it next year when we roll the system over, if you add the two reports, the health insurance reports, and add in this report here, it should equal the warrant article,
Okay.
except for your food service and the grant fund.
Okay.
Okay.
Just for my edification. When you have a grant coming in,
Yeah.
so just pick your numbers, I got $100 coming in for a grant.
Yep.
And I'm gonna spend that grant on books, for lack of a better word. Right, so do I reflect that $100 books in my expense and then I'm offsetting with the revenue? It's kind of like what you're discussing about with the premium coming back.
Right.
Or do you not show it in expense because it's paid for already? How does?
Oh, you mean like a donation of a book?
Well, no, so I got a grant. Somebody gives me a grant. I don't know, the Boosters Club gives me a grant for $100.
Yeah.
And they say, I want you to buy books for that. And we say, okay. And we go out and we purchase books for $100. So we purchase books for $100. It's gonna be on the manifest, $100 bill coming from Village Bookstore.
Yeah.
And we're gonna write a check to Village Bookstore for $100. Does that $100 still show an expense and then it's offset by the revenue?
Yes. Well, it's not in the same account.
No, not in the same account.
Right, right. So on the expenditure report, it would show an expense. And then on the revenue, when we receive the funds from the Boosters Club, that would show as a revenue.
So do the ESSER funds work in the same way? Since we're gonna be
Yes.
spending them on something, I'm gonna see them in expense and then I'm gonna see the funding come
Yes.
in revenue.
Yes,
Okay,
but not in these reports. This is general fund only.
yes, correct, okay.
Okay, so, and to distinguish the budget from like ESSER funds, okay? The budget only includes grants that we get every single year and we can count on them every single year. Like IDEA, which is a special education grant, or Title I, which is reading and math, and then like Title II. Those are put into the operating budget. So we get approval from the taxpayers to receive those funds and spend it. Anything outside of those, have to go to the school board to get authorization to spend. Okay, and that's why you have the public hearings and accepting grants.
Okay.
Okay. All right, revenues. Year-to-date revenues is $26,391,937. Of this, we've recorded all of the Kingston and Newton appropriation as a receivable because we're going to get it, and they pay us on a monthly basis. We've only made one bill, one invoice to Fremont. I'm going to be discussing that in my business administrator's comments.
Okay.
And then also we received $245,000 from school building aid. And in the last month, we received $693,000 from adequate education.
Great.
And these are all grants from the state of New Hampshire.
So that 8,400,000, is that included in the operating budget report in the ending balance? Or is that a separate, in addition to the ending balance?
This right here,
That 8 million that's left over
this is what we have yet to collect.
to collect, right? But you've already recorded it as collected because you know you're gonna get it.
Only for Kingston and Newton.
Right. Oh, okay. Okay.
Right, because we're gonna get it.
Right.
One way or another, we're gonna get those funds.
But is that money included in the current operating balance remaining? Because you've got encumbered money, you've got,
Oh, no,
it's not.
it's not.
So this is in addition.
No, they're not additive.
No,
Because
not yet.
the leftover is for your budgeted money. This is where your budgeted money is coming from.
Well, that's
Right.
And 8.4 million of the budgeted money we have not received yet.
Okay, so it's there.
So it's the funding for what's in the.
Just the
Right,
cash flow.
well-
That's just the cash flow.
Right.
If we receive revenue above our revenue budget.
Yeah.
That flows to fund balance and will reduce the tax rate.
So some of that 8 million may be in that category.
So if the state decides that they're going to give building aid of 591,000 rather than 491,000, that extra $100,000 that was
Yes.
not planned for in the revenue is going to be available as unexpended funds for rebate back to the taxpayer.
Yes,
So actually, some of all of that money.
yes,
Okay.
yeah. It's just right now it's being shown as a positive number. It
Right.
should be really a negative number. Because we haven't received the
Right,
funds
right,
yet.
right, right.
Okay. All right. Open items. The roof at the cemetery, untouched. Memorial playground, we have the parts and they have been installed. So that's complete. The roof, there are 4 leaks at the high school. Right now we're trying to bring in some contractors to come up with prices to repair these. Okay, one of them is the damage in the library. Okay. Book purchases.
Any concern of having that completed, not completed by the time the winter sets in?
No.
Because we've had that in the past, right?
Yeah.
What's happening to the water as it enters the building? Is it being collected somehow?
Part of the problem is it's over the library, it's being driven in around the windows. So the repair is really a larger discussion I think we need to have.
Has anybody gone up there with the idea of temporarily putting some caulk around the windows to seal them up?
I don't believe we have, but we can try. Yeah, we can do that. And I guess that might be a good idea, because if the siding is failing, then you're not gonna damage the thing further.
And,
I'll send someone up to go do that.
okay.
Okay.
Yep.
All right, and then I've had a request to receive copies of book purchases. I've got some new ones that are linked in this document. Heinemann, $82,836. If you have access to that file, you can click on it and actually see the invoice. Okay, and then there's another one linked right here, Savas, and I think that one's like 13,000.
I know Dr. Haynes sent me a list of all the books that have come in. She sent it to me, I think, the end of last week. I
Yeah.
had a chance to look at that, everything else going on. So I'll take a look at those and tie these two out. Because I was interested, Jim, as you know, not only just how much is being spent, but also on the titles that are coming in. And one of my concerns, and we'll talk about that, it's one of the questions in the budget thing is, we had talked when we approved the Columbia literature books being purchased, that they had a distinct lack of books about our founding documents and founding fathers. And it's something I want to see addressed. So I'm trying to see what do we have, and then how do we pick up some additional books in that area.
All right. You all set?
Yeah.
Okay.
Thank you.
Business administrator comments. All right, so the tax rate was set for the town of Kingston. It's set at $21.28 per $1,000 of assessed value. The school portion of that tax rate is $15.74 per thousand, which is lower than the prior year by 36 cents. The tax rate for the town of Newton has not yet been set. The latest CPIU information and I provided a link for it. The consumer price index for October is 5.6. For New England, it's 5.6 for New England, 4 for the Boston metro area, which is the prior month. 6.4 for areas less than 2.5 million people. So this is higher than it was the month before. The financial condition of the district, spell cash correctly. The district has a cash balance of $5.2 million for all of its operations. This does not include athletics or student activity funds. The cash balance is sufficient to operate the district for 1.7 months without receiving any additional cash flow. I've made this assumption based upon a cash burn rate of just over 3 million. It's basically your operating budget divided by 12. Okay. To date, we've received our monthly assessment from the town of Newton, but not from the town of Kingston. Kingston has contacted us regarding the payment and expect to provide it to us later this month. It is typical for towns to have low cash balances in November and early December of each year, where the towns often have to fund the school and county assessment with their real estate tax receipts. So basically, the county payment is a lump sum. And so they've got this huge balloon payment that they've got to make, like
One annual payment?
One annual payment for the county.
When is that made?
It's usually at the beginning of December. Okay, so towns are usually in a cash flow crunch. All right. However, mortgage companies typically make large tax deposits at the end of November, the first week of December. So also dropping our monthly assessment to each of the towns really helped out all the taxpayers, avoided unnecessary costs. So basically, if we demand
Clear
payment,
towns didn't have to borrow money.
exactly. Yeah, so if we demand payment from the towns, they have to issue a note and pay interest costs for that, okay?
And we're sufficient with what the cash we have on hand for burn rate. They'll be flush by the time we need the money, then they'll be able to fund us.
Exactly, okay? So it's kind of like we have to be a good citizen so that the taxpayers benefit from it, okay? I'm rehashing our revenues here. We've received we've recorded almost 76% of our revenues. However, I'm going to be changing the budgeted numbers for the revenues. I change them once the tax rate is set. So I'm changing them to actual. When we first start off the year, I'm changing them based upon, or I record them based upon what the budget was set at district meeting, okay? The revenue recognizes a tuition receipt from, or revenue from the Fremont School District for $978,000. As of this date, the invoice is 5 days overdue. The district has contacted us and is waiting for an assessment payment from the town of Fremont before they release that check. Okay. So we've received one of our adequacy payments totaling $693,000. We received one half of our building aid payment of $245,000. General fund expenditures through the year are 8.8 million, and encumbrances are 17 million. The amount of appropriations remaining is 3.6 million, or 12%. The amount remaining is typical for the end of the year, or this time of the year. The large encumbrance mostly represents payroll that's been encumbered through the remainder of the fiscal year. Notable expenditures are $100,000 payment to the Kingston trustees of trust funds for our capital reserve and expendable trust funds that were authorized in the last district meeting. Costs, and then also costs related to the Bakey boiler project for $165,000. We have some future considerations, which we are evaluating proposals for the repair of the Bakey septic system. There are 2 pumps that pump water from the storage tank out into the leach field. One pump is failed completely. The original estimate's over $20,000 to replace both pumps. However, we're uncovering additional repairs that are needed, such as a water damage to an electrical panel. We're also evaluating changes in how we're operating the heating system at Memorial. So we're going to try to start the oil burners in the morning, bring the temperature up more quickly with the oil burners, and then switch over to the heat pumps for the remainder of the day. What we did is we did an analysis of the electrical usage, and what we found is it's like in the month of May, they used 9,000 kilowatt hours. And in the month of February, they used 49,000 kilowatt hours. So it might be cheaper just to kick on the oil burner instead of trying to get the, let me back up.
Instead of getting the heat pumps to bring everything up on.
Yeah, because as it gets colder, those heat pumps become less and less efficient.
Right.
Okay, so that's it for business administrator comments. I'm going to jump into budget adjustments, okay? The first one is special education. They are requesting a transfer of appropriation from the high school out-of-state tuition to the middle school out-of-state tuition for $131,446. And it's to cover the cost of an out-of-district placement.
So I'll move to approve the adjustment.
Second.
Okay. So everyone's in favor?
Yeah, just a question on that.
Yes.
Did we have in the high school previously an out of district that's not going on, and now one in middle school that wasn't planned?
I would.
That's a big
believe
chunk of
that's
money that's
true.
moving.
I would believe that's true, that special education, I try to not understand,
Yeah,
because I don't want to be able to answer those.
but we don't want to be so specific that we give away any individual or personal
That's
information.
right.
Yeah.
Yeah,
It's just, it's a lot of money to be available in the high school one
yes.
for an out of placement. So I'm just figuring there must be some
Yeah.
type of a balance
So-
in there.
When special education creates their budget, they base it upon, she would look at what her needs are based upon students that are in the district today. and what they're projecting based upon their IEPs, what their cost would be.
And
So,
that was done in the fall of last year.
yeah, a long time ago. And things have changed since then. All right, the next one is heating oil. So basically, when I first read this a while ago, I saw old campus, and what they meant was old campus for the middle school, and this is for heating oil. The seminary campus has propane, okay? It doesn't use oil. So basically, we got to cover some funds for the additional, we're transferring money for Bicky, and then we're transferring money for the old middle school for our portion of that building that we still have to heat.
So the seminary building is not being heated presently, right?
It's being heated with propane
Why?
because we've been asked to heat it, and we can have this discussion too with the, he hasn't, Jamie asked to have an agenda item to discuss
Okay,
costs,
all right.
okay? So this is just oil.
Yeah.
Okay. I need your approval for this.
Yeah, so I'll move to approve.
Second. All in favor?
Aye.
All right, thank you. The
What
last,
was it? Can you go back for a second? Let me get the dollar amount. Some of this. 24.9. Looks like.
yeah. The last time I kind of brought in adjusting the balance up. Okay, this just moves things around.
Yeah, I just want so that I can report to the board, you know, they're gonna get the
Gotcha.
report out because we have to give the board the information about the transfer, so I want to just have the right relative numbers.
Yep. Okay.
Thank you.
The next one is middle school bookshelves. So basically what we want to do is, let me scroll down here. We have a quote here to buy 8 bookshelves for the middle school, and these are bookshelves that would be, what's the word? It's in the same series of furniture that we have here in this building, okay? So if we buy bookshelves like off the store, it wouldn't match. It wouldn't be as rugged. It wouldn't be like school quality furniture, okay? So this is 8 bookshelves.
How big are these bookshelves? That's $1,000 a bookshelf.
Yeah, so they're
1,600.
they're 66 inches high.
Are these replacement bookshelves or new?
No,
bookshelves?
these are new bookshelves.
And they're needed because,
We have, I believe this is for the math program at the middle school.
12,
That seems like, that seems extremely high to me.
we need 12 bookshelves for the new math program?
8
Eight
bookshelves.
bookshelves,
Yeah.
but still.
I mean, if you guys say no, I'm gonna go shopping out for something else.
Yeah, to me personally, Jim, I don't know your perspective, to me, this is an awful lot, and 8 bookshelves, these are only 5'6". How long are they?
They're 4 feet wide. And,
In retrospect, you can go down to Home Depot, it doesn't look as nice, but you can get the rack system for $80, $100 for
Where would these go?
these would go into a classroom in the middle school.
One classroom?
Yes, no, I believe it would be mixed upon 2 classrooms. Boy, this was done like a month ago, so.
that. I mean, I'm not suggesting getting those metal racks from Home Depot, but
Right.
you know, this is $100 for that as an alternative on the wrong side.
Okay.
This is $1,600.
Is this a company that specializes in school
Yes,
fixtures?
yes, furniture, yes.
But I'm wondering if it's like buying things for a boat, but you could go somewhere else and get them a lot cheaper, the same duty level and same quality. I think we need to bid it out.
Okay,
Yeah,
Yeah.
sure.
it's above the 2,500.
And just if you could validate, I thought these were for the recent Columbia book purchases. If it's for the math program, I shouldn't need 8 bookcases for the math program. So if you just validate what the intended purpose is.
Do you want me to bring
It
this
strikes,
back?
it strikes me as odd that it's for the math program.
Do you want me to bring this back?
Yeah, if you could,
Okay.
get some better clarification on that, please.
Let me add myself a comment. Okay, all right. Jamie had asked me about budget assumptions on inflation in the proposed budget.
Yeah, so let me just, we're seeing higher inflation now than we've seen in 30 years. They're actually talking in Congress tonight about potentially, in addition to the 1.25 trillion that they just passed, passing another 1.75 trillion, which could be actually 3.5 trillion, depending on how you, because all they've done is say, let's just pretend that it's shorter.
Right.
I mean, if all this goes through, we're going to be in a heavily inflationary period. And so I wanted to find out from Matt, just what exactly has he built into this budget that we're going to be talking about tonight in terms of inflationary assumptions.
Well, you're gonna feel like a boomerang, okay? But anyways, right now, okay, so this is the state of New Hampshire's website right here for fuel prices, okay? The current price is $3.31 a gallon for heating oil, $3.74 a gallon for propane. We don't have any kerosene, okay? Again, this is residential off-the-shelf prices. It's not what we would buy at.
Yep.
Okay. I have a spreadsheet where I put in our rates here for 85,000 gallons. I put in $2.50 a gallon. I should make it look like $1 to come up with what the amount is. We have this formula where we allocate it amongst the different locations to come up with what, how it gets allocated in the budget. Okay.
So you got a $2.50
Yeah, so
figure in the budget?
I like to buy my heating oil in summer
Yeah.
when the prices are the lowest. Okay. I think I can beat $3 right now if I wait. Okay. But that's also a gamble. All right. On the flip side, there's also talk about trying to buy heating oil for multiple year contract.
I don't know if you heard the news today. I think you're right in waiting. Federal court just shot down the ban on drilling in federal lands that were put in when the administration changed.
Okay.
So even if that doesn't become a practical change in the supply, just the knowledge of that and the potential future is going to have an impact on the futures market. So you should be able to buy better coming up than you would have been able to now.
So my experience with buying American oil is the pumps come online when the prices go up. So right now the prices are high, all the pumps are coming online. So at the beginning of the pandemic, there were, well, actually in the fall before the beginning of the pandemic, there were 1,500 wells in the United States that were online. By the end of that summer of the pandemic, we were at 50. Yeah.
Wow.
Because the price of oil was so cheap. So when I got oil at $1.55, we were pulling it in from, it was probably coming from Venezuela. So, so as prices go higher, we're actually benefiting people more here in the United States. Okay.
In terms of volume, but not price.
Right.
Eventually, maybe you'll level out.
Electricity. This is the one that scares me the most. And what I wanted to show you here is the PUC order. So this is an order from October 8th. And basically what they're trying to do is they're saying, now these are for
This is
residents.
an application, right?
No, this is
Oh,
a
this is approved?
decision.
Oh, okay.
This is an order.
Oh, okay.
So starting on or after December 1st, Unitil's rates are going to go up to 17.5 cents a kilowatt hour for its residential customers. Okay. For So you should see like about a 60% increase in your electric bill. For commercial customers, we should see approximately a 61.3% in our electric bills. Okay, right now we're buying electricity at just over 7 cents per kilowatt hour. All right, through Constellation. And that contract is going to expire in November of 23. No. Yes.
Do they have anything in their agreement with us where they can, under certain circumstances, increase their rates before the expiration?
No.
Okay.
Okay. So,
If they're holding it from December 1st until November of 2023, then you're gonna get they're gonna come in full bore as soon as they can.
right.
Because in their minds, they've lost the money that they should have otherwise got for
Yes.
the rate increase.
So soon we're going to start shopping around for rates because there's like a time frame where you have to tell the utility that you got to switch over.
Yeah.
Because if you don't do it within that time frame, you get penalized. Okay.
But you're gonna include them as one of the bidders, right?
Who Unifil?
No, the company you said we're buying from,
Yeah, Constellation.
Constellation.
Yeah, absolutely.
Yeah.
Yeah.
But that, I mean, if we're paying 7 cents or up to 17. Yeah, we're 150% higher, not 60% higher.
Well, this is 60% based upon the rate that they went from.
The
Okay,
retail rate.
but for us, we're looking at, because of where our negotiation scenario, we're looking at a close to 150% increase.
Okay. So again, this kind of opens up the possibility that a solar project may be cost beneficial.
So what kilowatt hour did you use in the budget numbers that you set up?
Oh, it's basically what it is just it's just because our bills are so flat because of our rates, it's really not. I can't say. You're gonna find out.
Okay. You don't want to steal your thunder for the next meeting?
It's not my thunder.
Tom's thunder?
Yeah. Health insurance. This is the actual rate that we're gonna be charged next year. Okay, and the rates.
So we have that information now.
Yeah, we do now, but we didn't when we first created the budget.
Okay, so
So when I created the budget that we presented already, I estimated 10% increase, okay? And last year we did the same thing, but we also reduced it down to like 6.5% because we felt comfortable doing it, okay? This year, the rate came in, you can see the lowest one here is 7.8%. And the highest is 9.8. I started at 10% again.
okay, now, I sent you some questions about that. We're gonna hear about that tonight.
Well, we're answering all the questions.
Okay. Because there were some in there, some of the increases in there were at 17%.
You can't look at the individual line items because the system, I couldn't rely on the health insurance data because of the way that they imported the data into the system. So it's basically based upon last year times a factor. So we were looking at health insurance as an aggregate, not as an individual line item. Okay.
I mean, Matt had mentioned these to me, and I want to get them right out in front of the committee. These are big numbers from what we have been seeing. And if you pay attention, people at home, when we've seen some of these budget transfers, we've seen them transfer out of the health funds
Right.
For the last 2 years. When we needed to find money, this is going to say that could be very well tight this year.
All right. Can I switch on to the next thing?
Please.
So, Jamie brought up in his agenda item that we're receiving an extra $5,000 from Jimber for operational costs. So what we did is we estimated what propane would be for the building through the end of December. And it would be $7,485.20. So basically what I did is we took the usage for November, December of last year, multiplied it by the rate for this year to come up with the usage. Okay,
And that estimate's probably a bit high, because so far in November, it's been much warmer in November than it was last year.
exactly. And the bill that actually came in for one of the other buildings is like half of what it was the year
So
before.
we're not gonna be too far off the mark then to the 5,000 that came in.
I just wanted to kind of give you the best guess that I've got right now. Okay. Elevator access control. So, the cost for this, are you familiar with the issue?
Yep.
Okay. Basically, this would be putting a swipe card on the exterior of the elevator, so the doors won't even open. Okay, unless
Swiped.
unless swiped. So like if you had a student that needed, they broke a leg, they need to get around the building, they would be issued a swipe card. They would access once they swiped it, the doors would open, they could enter and then come back out, and it was shut. No one else would be able to get in there.
And that's a combination like a hotel, you can change it at any time and issue new cards.
Yes, that's right. And then if we put the swipe card inside the elevator, then anyone can get in the elevator and it wouldn't stop the problem.
No, that's been outside.
Okay. So the cost of putting it on the outside is $2,856.
Does that include what you need to do for the Otis tie-in or no?
No.
Okay.
Okay, that is an additional. And basically, that's $395 an hour. It would be a person standing there for about 2 hours watching our key guy install the.
Do they have to carry a clipboard and wear a hard hat?
Do I have to answer that? Okay,
So all told, you're somewhere in the neighborhood of 3.5.
yes.
So that's a lot better than previous quotes.
Well, you feared that this was gonna combine at about 8,000, I believe you said in the last
Yeah.
meeting. Although you had one that looked like it was gonna be 4, but then you had extra money on it for
Let me
Otis.
look at this. Yeah. Yeah, 2856. Okay,
I'll say, yeah, 3,600 bucks.
so we're gonna go ahead and do this. All right,
I don't have an issue with this, Jim. Your thoughts?
I'm fine with it.
okay,
Thanks for doing the extra work on it, though.
yeah, no, thank you. The last one here is an ACH procedure and training document. Okay, Jamie at the school board meeting had asked for this. And this is not uncommon, is to have a document like this. And I kind of made this thing up using a whole bunch of other people's policies and procedures. But I tried to make it simple for just the purposes here.
Yeah.
All right. So basically, I first started off, it's just to establish safeguards to protect the district's assets. These are the different kinds of definitions we have in here. We have electronic fund transfers, and electronic fund transfers includes ACH or automated clearinghouse, and also direct deposit. I wanted to include in here the payroll direct deposit information because it's very similar, and the processes are very similar, and the frauds are very similar.
Yeah.
Okay.
No, that's, we should do that. I thought of that. That's
Okay.
appropriate.
So yeah, again, the types of payments made are vendor payments, and the payments are to contractors, service providers, and suppliers. And also they may relate to employee benefits. Okay. The second one is for payroll. It would be the net check that goes directly into the employee's bank account. Now, the procedures that I have down in here, and I highlighted a couple of them by underlining them. So the first one is no data record shall be altered solely based upon an email or letter without verification. Okay, so if we get an email,
Somewhere in here, do you define what verification is?
well, verification would be calling up the company or bringing the employee down. Right now, we have a policy with employees that they either need to be present in front of us. We will not accept a email saying, please move my bank account information to this.
Because you're gonna be giving this to employees, right?
Yeah,
Are they gonna know what the verification requirements are?
let's see if I have down here all additions and changes in banking information or remit to address will be independently verified using publicly available contact information. Exceptions to this must be approved by the business administrator or superintendent.
What I'd like to do is just spend some time on it, and any ideas I have, and I'll pass them on to
Absolutely.
your thoughts.
Yeah.
But I think that's a good point, Jim, when we say verification. Also, where it says, based upon an email, I would prefer, I think we're safer if emails simply aren't acceptable. We won't use an email, period. Even if we verified it after, it has to be signatured,
Yes,
paper form.
well,
Because there's no such real thing as an email signature.
I have
There is
here,
legally, but I mean, it's not as safe.
You
Yes.
can't verify where it came from necessarily.
Yeah,
I have also down here, all ACH transfer requests will be made upon the district approved ACH authorization form or similar facsimile. Okay, which includes a signature. Okay. So there will be no electronic transfers to foreign financial institutions. Foreign means outside the United States.
okay. Let's wrap up because we have the next meeting about to start. But Matt, if you could, well, you've already given us this, Jim, if you could look at this, I'll drop Maura a note also to look at this. And Matt will put in any suggestions that we might have.
Yep.
And then you can take a look at that and then we can finalize this.
Cool. Thank you.
All right,
Sounds good.
thank you.
Meeting's adjourned.
Meeting's adjourned.
Thank you.